Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, June 19th, 2023. Thanks for watching. Today I'm down in downtown Crystal Lake at Aroma. It's a coffee shop and restaurant. I highly suggest you check it out. It's really close to the train station. We've got Giorgio's back here, and then around the corner on Williams Street, lots of other good restaurants and shopping. So today we're having our team meeting at Aroma, so I thought we would just do our Monday market update here for a little change of scenery. So taking a quick look at our McHenry County numbers for the last 7 days, we had 131 new listings hit the market, 148 under contract, 128 closed sales, 28 price changes, 3 expired, and 52 on the private network. So we are still seeing more homes going under contract than newly listed. We had a couple weeks where that wasn't the case, but now we're back to this. We still have very low inventory, very high demand. Interest rates are going up by the day. Prices are going up by the day. Buyers are frustrated, sellers are frustrated because a lot of times the sellers are also buyers somewhere else. So what is going on in our real estate market? Well, I listened to an interview on CNBC from Don Mullen. He's the CEO of Pretium, which is a company that buys real estate in the United States and then it rents it out. One of the things that he talked about is that owner-occupied homes for sale is down 70%. Now, why is that? Well, because 75% of homeowners currently have an interest rate below 4%. So current homeowners know that they could not go out and buy the same home that they're in right now for the same monthly payment, because most people are driven by what is their monthly payment. Regardless of sort of the price of the home or even the interest rate, which obviously those things affect your monthly payment, but most people are really driven by what is my monthly payment going to be. Well, your monthly payment is going to be much higher right now because of interest rates, obviously. So most homeowners are kind of not thinking about upsizing their home. The cost of money is double what they bought their current home at. So upgrading is not really possible for them. People have been waiting for prices to come down, and they've remained stubbornly high. In fact, in many places they have gone up. Here in Crystal Lake, we know that the median sales price is $330,000. That is over $100,000 higher than it was 5 years ago. So prices have gone up drastically in the last 5 years, and then with interest rates going up as well, we've just got a situation where a lot of people just simply aren't able to buy. A couple other things. You'd think that high prices would incentivize people to sell or builders to build, and for sure home builders have seen better margins than they've had in decades, but the cost of money is making that difficult. The feds have destroyed more supply than demand by increasing these rates. They've made demand so difficult by making the cost of money so high. So we've got demand is demographically driven, not just interest rate driven. That was an interesting point that Don Mullen said, and I've seen that in my business as well. I know that the reason that the people are moving that I'm working with is they're getting job transfers, they're having babies, they're getting married, they're getting divorced. Those are the reasons people move, and those things are continuing to happen. So we have people moving who have to move, but we're not having people move who just simply want to move. Maybe they want to upgrade their home. That's not happening. They want to downsize. A lot of people are not prepared to do that. We know that the Richmond Federal Reserve President Tom Barkin said Friday that if inflation doesn't fall closer to the Fed's target of 2%, he's comfortable raising rates again. The Fed has moved aggressively against inflation over the last 15 months, hiking rates 5 percentage points to the current rate of 5% or to 5.25%. Officials decided to pause in June, but they are now projecting 2 more rate hikes this year, bringing the Fed rate to as high as 5.5% or 5.75%. For some perspective on the federal rate and what that does to interest rates, the federal rate was 5.25% in June of 2006 when mortgage rates were 7%, and the Fed funds rate was 6.5% in 2000 when mortgage rates were 8%. So currently the average 30-year fixed rate is around 7.4%, and that could go up to 8% if we don't see inflation curb even more. We are seeing right now the reemergence of ARMs, adjustable rate mortgages. That's a good option for some people. And point buy downs. A 2-to-1 buy down is a good product that a lot of people might try and get right now. I would talk to your lender if that is something that you would be available to get. It is something that I know some of my clients have gotten, and it's worked out well for them, because then when the interest rate does come down, you can refinance and you'll get some of the money back. Here's an interesting point. Barbara Corcoran, who's the most famous Shark Tank judge, has said that now is the time to buy a house, because when the rates do come down, which they will, everyone will be charging towards the market and prices will go up dramatically. So that is something to think about. So we still have high inflation rates. They're coming down. We've had good inflation reports, but they're still higher than what the feds want. Their target is 2%. I don't know when we will see that, hopefully at some point this year. But by raising the interest rates, we're seeing them cause more of a constraint on demand, which is simply going to make prices go up, which is not going to help inflation at all, but we'll see how that pans out through the end of the year. But I will tell you that interest rates will come down eventually, and when they do, there are a lot of people sitting on the sidelines right now, and they're going to come out of the woodwork. So you're better off buying a house now, because prices are expected to continue to go up through the end of the year. We're expecting at least 6% appreciation through the end of this year. So prices will continue to go up. If interest rates continue to go up, it's just going to make it even harder to buy. We have more people in the Generation X, the millennial generation and Gen Zers right now, which means household formations are still very high. As those people continue to buy their first home, they are taking up more of that inventory, and they're going to make prices continue to go up. And those people have a lot of money. And here's something interesting too: there's more people in the millennial generation and Gen Z than are even in the baby boomers. So we know that we had a huge influx of buyers when the baby boomers turned 30, and the same thing is happening right now. So demand is going nowhere, and inflation will continue to hopefully come down, and interest rates will come down eventually. But I say get in a house now before those prices continue to go up. I'm Miranda Alt with Keller Williams Success Realty and the Miranda Alt team. Thanks so much for watching. Have a great day.